all markets get this big rush at the final run up. It goes parabolic, and people just are fearful of missing out, and so they're paying high and higher and higher and highest until you run out of buyers, and then you get a sharp decline right away. I do think that's going to happen in the metals again, unless they are brought into the monetary system some way. But they're more diversified, especially silver, because it's in more hands worldwide, and it's small hands, retail investors. So it's possible that might mitigate a sharp correction.
Well, the rush and excitement in markets before a sharp increase in prices is called a final run-up or parabolic move. However, this cannot go on forever because eventually there will not be enough buyers to sustain the high prices. When that happens, there is a sudden and steep drop in prices, known as a sharp decline. David Morgan, the founder of the Morgan Report, believes that this could happen again in the precious metals market, like gold and silver, unless precious metals are integrated more into the monetary system. By doing so, their value might be more stable and less susceptible to extreme fluctuations. Morgan highlighted that the price of silver can surge rapidly, and most of the significant price increase occurs during the final phase of the surge. This was evident in the silver market in the late 1970s and early 1980s. During the late 1970s, there were significant economic and political events happening worldwide that led to a rise in inflation. This inflationary trend made many investors believe that the prices of silver should increase to keep up with these economic changes. As a result, investors stopped selling their existing silver and started buying more of it. By the end of 1979, the prices of silver had gone up significantly, reaching levels between $15 and $25 per ounce. However, several factors in the physical market started to work against even higher prices. The Elliott wave theory in technical analysis describes price movements in the financial market. Morgan used this theory to predict that silver, which was around $12 during the COVID-19 situation in March 2020, could potentially reach $120 an ounce. However, past performance does not guarantee future results, and investing involves risks. Gold price on July 29th is at $1,959 per ounce, but it needs to break out of this level to continue its upward trend. The previous resistance level for gold was around $2,000, and in order to reach new highs, gold will need to break through this level and all other resistance levels that stand in its way. Morgan believes that buying at a new high can be safe, as long as you are aware of the starting point of the new high and have a stop-loss plan in case the price starts to decline. Before diving into David Morgan's interview, don't forget to show your support by giving this video a big thumbs up and subscribing to our channel.
And Jeff said it years and years ago, and of course my ears perked up, and he said 90% of the move comes in the last 10% of the time in the silver market. And that caught my attention. Of course, I knew what he was talking about, so I went home and I did the arithmetic.
Yeah.
And I found out that, during the Hunt situation in the late 70s, 1980, that if you were a patient investor and you bought silver in 1965 when it was taken out of circulation at $1.29 an ounce, and you waited until January 1979, you'd hit an all-time high of $6 an ounce. But if you were a rank speculator, you didn't know any better, you got in at $6 an ounce in January 79, you waited 1 year, it went from $6 to $50. So you had over an 800% increase in 1 year. So if you do the arithmetic, what you find out is that move from 6 to 50 is about 90% of the move. And if you look at it from 1965 to 1980, it was in about 7% of the time. So the rough numbers. Now, just because that's what happened in the past doesn't guarantee it'll happen in the future. But what I do know in all markets is that the final leg, the Elliott wave guys will call it the third leg up.
Yeah.
It's usually double the second one. So the second leg up in silver was from around $9 to $50. So that was about a five-fold increase. So if you double 5, that's 10. So you go from the bottom this time, which is roughly 12 during the CV19 situation in March 2020. And it was a spike 12. I don't count it, but I'll use it as the low. So 12 times 10 is 120. Now, I've said back in 2003 in my first book that silver would be $100 an ounce, roughly speaking. I do expect triple-digit silver, and I still do. Technically, you would have to wait. and just be patient and wait for gold to break the all-time high, which is, I don't know the exact number, 2,067 or something like that. It would have to maintain that above that price for at least 3 days in a row. That's the Morgan rule. And then if it does do that on bigger than average volume, then you have about an 85% probability you're on your way. So now in the commodities markets, as you probably heard others tell you or talk about, old resistance becomes new support. So we have a resistance around 2,000. Once it breaks through to the new high and it settles above that, then that becomes support. So it's not going to go below 2,000 without a lot of work. So it's going to go from 2,000. And what most people don't know, and I learned this from Bill O'Neill when I took a course at Investors Business Daily from the master himself. Bill actually taught the course. As the reason you actually want to buy on a new high when it first starts as a new high is because if a stock goes from $5 to $50, how many new highs does it make? And the answer is a heck of a lot. Because when it goes, at 5 and it makes a new high at 6, everyone that owns it at 6 says, you know what, I'm making money, but I don't know how high is high. I'm going to hold on. So everyone's holding, so any new buying pushes the price up to 8. And now those people that owned it at 5 say, he's $8. That's a pretty good profit. But how high is it going to go? I'm going to hold. So any new buying takes it up to 10. And on it goes until it exhausts. It's like throwing a ball into the air. It'll keep going up, but eventually it will hit equilibrium and start coming down. But there's nothing safer than actually buying at a new high, as long as you know where the new high starts and then just follow it up with a stop. I mean, I did quite well in the run up in silver in April, May 2011. And I called the top. I called the top for my subscribers. And then I said it publicly. And, looking back with 2020 hindsight, I probably should have just bypassed the market for 10 years and come back in. But I didn't know the future, and I'm still a sound money advocate.
The Russian embassy in Kenya declared the BRICS countries are planning to introduce a new trading currency, which will be backed by gold. David thinks a new gold-backed currency could affect the gold market, but not immediately. If it's convertible, it could have a more significant impact. The special advantage the U.S. has because the U.S. dollar is the world's primary reserve currency is now being challenged. The BRICS countries are trying to promote the idea of creating a competing currency to replace the U.S. dollar's dominance. David believes that the current situation indicates that some countries are looking to break away from the dominance of the U.S. dollar and explore alternative currency options backed by real assets like gold. In recent years, many countries have been avoiding using the U.S. dollar for their international trade and are instead choosing to use their own currencies in bilateral trade agreements. For example, Brazil and China recently agreed to trade using their own currencies, and Japan and Russia are also doing the same, despite facing sanctions from the U.S. Even Saudi Arabia, a major oil exporter, is considering trading with China using their own currencies, the Saudi rial and the Chinese yuan, instead of relying on the U.S. dollar. David believes that this trend is likely to continue. Let's watch DavidMorgan's interview with Stansberry Research.
I mean, just because you make an announcement, that doesn't mean much of anything. And that's basically what they're doing. They're going to announce that the BRICS are going to have a gold-backed currency. And it's possible, and it's probably probable at some point that they will. But it's very difficult to get those 5 different cultures to really work together. It's kind of like the Euro situation. I mean, the Germans have a lot different work ethic and vacation strategy and all that than, let's say, Greece does. And so you put them all together, it's rather difficult to stir the pot and mix it up and make it work. Euro, again, is an example. So here we've got Brazil, we've got India, we've got Russia, we've got China. If they make it convertible, where you can buy the BRICS currency and immediately exchange it for, physical gold, then that will impact the market. And if the BRICS decide to peg the gold price higher than, let's say, what the COMEX or the LBMA has, that will cause an arbitrage situation, which people say, oh, gold's at 2,000 and they're pegging it at 2,200. So it'll almost immediately correct because of the arbitrage like that in any market. Markets are very efficient, especially when it comes to arbitrage. So they could be setting a new price for gold in, US dollar terms or yuan terms or ruble terms or whatever. I think that it's more hype than anything else at this point. I do like the fact that it proves one of my basic premises, and that is at the end of all great inflations, that the free market comes to the fore and starts finding ways to mitigate the problem. And what have we seen? Well, we've seen a lot of crypto over the last decade, right? That's to mitigate the problem. That's to get out of the current situation. You got barter clubs. Of course, you've got precious metals all the way along. And then you have individual counties that have their own dollars. Ithaca dollars comes to mind. You can look it up on the web. But this is where communities agree that they're just going to bow out of the system. These are small communities usually, but we're just going to make up our own receipts for labor, and we're going to pass them around our community, and this is how we're going to settle business in our small town. That's kind of a one-off because you couldn't do that on a national basis. But coming back, so there's countries that are banding together that's saying, hey, we've had enough of this U.S. dollar dominance. It's really based on nothing than hot air and politicians' rhetoric, and we're tired of giving you real goods and services for it, so we're going to start our own currency. So it's all shaping up to the fact that we're near the end game.
Well,
Janet Yellen gave a speech recently that like 90% is done in dollars. That's BS. It's about half that amount. So as you just outlined, more and more countries are just settling between themselves and their own currencies, and that trend will continue. I mean, the dollar index right now is around 100. It was like 105 just back in March. So it's losing value on the Dixie, the dollar index, pretty rapidly. And I think the next threshold, I don't have all my charts in front of me, I think it's 92. And then if it breaches 92, then it's 70. And once it gets down to that level, and I think it will, there'll be more and more of a rush to settle outside of the U.S. dollar, settle in precious metals, settle in crypto, or what have you. So the dollar's days are numbered.
The precious metals market is facing some challenges, but there are also some opportunities. The rise of new gold-backed currencies could have a significant impact on the market, but it is too early to say what the long-term effects will be. However, it is clear that some countries are looking to break away from the dominance of the US dollar and explore alternative currency options backed by real assets like gold. This trend is likely to continue, and it could have a major impact on the global financial system. What do you think the future of the precious metals market looks like? That's all from us. If you like this video, please like, share and subscribe our channel and click the bell icon to be notified of future videos. Currently, 96% of our viewers have not subscribed to our channel. Our goal is to reach 1,000 subscribers as soon as possible, and we cannot achieve this without your support.